Mortgage rate update, May 27, 2026. Today we're going to go over rates after what happened over the weekend, deal or no deal with Iran, and some geopoliticals and my updated rates and talk about a promotion. Stay tuned. I did a video last week on rate update, and then we had some movement happen, especially over the weekend. And then we did some stuff internally. Actually got some good news for you. And management actually asked me to reach out to you, to the market, and discuss this stuff with you. And the best way for me to do it really is this medium, because I can't reach out to every single realtor every single day. It's just not possible through this medium. And I know you're watching it because I hear from you. I can definitely get this message out to you. But before we get the good news, let's talk about what happened over the weekend. Over the weekend, there was some pretty big talk about a deal with Iran, like a extended ceasefire, a peace deal, basically stopping the war movement to stop the war. And oil prices went down pretty big off of that. And then there was a strike in Iran, in southern Iran, also over the weekend, and then prices went up. Oil prices went up a little bit, but overall, there seems to be draft peace deals going back and forth, and talk about doing a deal. Whether you believe there's a deal or not, we're seeing a reprieve on rates. And when we look at the 10-year bond, 10-year Treasury bond, we saw it come down a little bit from Friday. Friday it was at 4.558%. Today, 4.481%. So we're seeing a little bit of reprieve right there in that bond market. This is kind of what banks, mortgage companies, we kind of use this as an indicator, and we add a little bit of margin onto that, to get a 30-year fixed rate. But this is your indicator of where the 30-year fix is going to be rate at plus a couple percent. Now, having said that, let's transition and see what you want to see, which is where my rates are at, where the rates you can get are at. So my rates, here they are. This is my public-facing webpage that you can view on your own. And I'm going to demo it for you right now. We have, as of today, May 27, 2026. I got my purchase rates. This is purchase money to buy a house. Conforming and government on the left-hand side, jumbo on the right-hand side. On the conforming side, my most popular product is going to be my 30-year fix. On the jumbo side, my most popular product is going to be my 7-year ARM. And you can see rates into 5. On the 30-year fix, 6.125 APR, 6.125, paying you back a quarter point. Just a smoking hot rate. It's down. It's down. That's what management wanted me to tell you. And this is to drill down deeper. We're looking at a $400,000 purchase, $300,000 loan amount, 30-day rate lock, 740 FICO score. Come back to all the product here. Remember, conforming on the left, jumbo on the right. Jumbo just means big loan amounts is what it means. And so let's take a peek and see how this compares. Okay, but before we take a look at the market, I want you to remember what I just quoted you. I just quoted you a purchase loan to buy a house, a loan amount of $300,000 on a purchase price of $400,000 in Sacramento, California. And that rate on that 30-year fixed product was 6.125%, and that APR was 6.125%. So now what we do is we take a look at the market and we try to do an apples to apples comparison. So we have Sacramento, California here. We have $400,000 purchase. We have $100,000 down payment. That makes the loan amount $300,000. So we're apples to apples. We find the same product I just quoted you that 6.125% APR at, and we take a look and see where the market's at on APR, and they're at 6.11% APR. And their note rate is 6.375% APR. But the problem on why there's a differential of an APR so much higher than the note rate is because of the points. It's 2,625. So you look at a 6.375% note rate, 6.611% APR, and you know there's fees in there, and that's what we're seeing right there, $2,625 in points. We'll drill down deeper, and we can validate those points with 0.875% charge. So 0.875% multiplied by that loan amount of $300,000 equals $2,625. And then that's how the math turns a note rate of 6.375% into a 6.611% APR. So remember, I'm at 6.125% APR. Here's where we get into final thoughts. And what I want to let you know, management actually wanted me to let you know this. Actually, I want to let you know this, but management actually wanted me to let you know that our $1,500 closing cost credit promotion, which was set to expire in a couple days, has been extended just for you, for our members, to July 31st, 2026. Great news. So we got a good rate update for you today. We got that the $1,500 closing cost credit extended. Rates are down. We're getting aggressive. And then let's talk about geopolitics playing into the market. So yeah, we are seeing some good news right now, but what happens if there's no deal? What happens if there's no deal with Iran? Because there's a lot of talk over the weekend about an Iran deal, and that set oil prices down. And then we saw the bond market get a little bit better, and we're seeing a couple things. One, we're getting aggressive internally, lowering our margins, and then also, and we're highly competitive. You could see that we did a market comparison. But also the bond market was coming down, so our cost of money is coming down. So that's good news. But what happens if there's no deal? Okay, what happens if more oil refineries start getting blown up and oil starts going up? Some more geopolitics. China selling off U.S. bonds. That's old news, but still material because where's the U.S. dollar as far as strength in the world? And then some more news. USA backing off $14 billion defense to Taiwan. So you're seeing, different things going on in the world, and all this plays into right here, United States of America, into us buying homes and getting mortgages. So, are we seeing pressure to the upside? Absolutely. We're seeing right now a little bit of reprieve, but with all this stuff going on, we don't know what happens on a day-to-day basis. So the best time to buy a house really is now, because if you can qualify and get approved and close on a house and have certainty of closure by owning, then do it. And I am never too busy for your mortgage referrals.